Joining me right now, Mahoney Asset Management CEO Ken Mahoney this morning. Also joining the conversation all morning long, Forbes Media Chairman and former Republican presidential candidate himself, Steve Forbes, and UBS Financial Services Private Wealth Advisor, Ali McCartney. Great to see everybody this morning. Thank you so much for being here. Ken, kicking it off with you, what are you expecting in terms of the economic data? We saw the CPI yesterday, higher than expected. Do you think we'll see the same for the PPI?
I think so. They tend to follow along with each other. And though at the same token, this may be the Goldilocks environment. And it's hard to say that after we had these hot prints. But at the end of the day, we have this Delta variant that everybody is obviously looking at, and in real time actually causes some havoc out there. So I think the Fed, again, they're not going to make decisions just on one data point like this morning. They're going to be cumulative. But at the end of the day, they should taper at some point. I think we all expect something maybe later this year. We don't need to be buying $120 billion worth of government bonds and agencies each month to prop up the economy, which is seemingly going along pretty well on its own.
What do you make of all of these vaccine mandates? Can now the New York Stock Exchange yesterday coming out and saying you must be vaccinated to get on the floor of the New York Stock Exchange? Same thing for McDonald's and a number of other companies. Does this weigh into the way you see the normalization on the horizon for business and what that means for the economy?
Look, this is such a unique situation. It's a moving target. Look at the CDC every day, Fauci every day, something different. Wear a mask, don't wear a mask, wear a mask on your elbow. I mean, it's all over the place, and it creates a lot of uncertainty. And, when you look at consumers and businesses, they like to project out 5 years or 10 years. They kind of look forward to, having those things. And with this virus around, it's very difficult to do that type of forecasting and planning. Again, both at the C-suite level all the way down to the household level. So I think the uncertainty about this, again, McDonald's, New York Stock Exchange, universities, one after another, doing all these kind of mandates, really just adds another layer of uncertainty on top of a whole bunch of uncertainties that we have to deal with already, Maria.
Yeah, and I wonder what that means for the macro story. You had Kansas City Federal Reserve President Esther George yesterday saying that the Fed needs to pull back on the monetary policy as the economy rebounds from this pandemic, supporting less bond buying from the central bank. You just said it a minute ago. You're thinking that we are going to start seeing that pullback. Does the conversation take flight at Jackson Hole in 2 weeks or a week and a half time? And do you think markets are ready for that? Or are we going to see a big sell-off once this conversation really takes flight?
Look, last time we had this taper tantrum where we started tapering, right? And it's really funny, Marie, a lot of times you say this news is known, so it should be priced in. And then when we get to the tapering, it's not priced in and we fall apart. Look, that'd be a perfect opportunity to talk about this kind of monetary policy change at the conference and there. But I also have to, look, Fed governors know what's happening on the fiscal side of things, right? They're seeing a lot of money. So it's a balancing act. And look, for this administration says, look, this economy is really strong under our administration. And yet they say we need another $3.5 trillion worth of stimulus. Really? It's really one or the other. Either the economy's strong and you don't need stimulus, or the economy's weak or weakening and we need that extra layer of stimulus.
Yeah, great point. Ali McCartney, I wonder how you see it. Sitting there at UBS, your thoughts on where we are in terms of all of these new vaccine mandates that we're hearing from corporate America. Does that affect your expectations in terms of the back to work normalization? And what about the Fed impacting the economy?
I like that you mentioned the comment yesterday from George, because you're definitely seeing increasingly sort of divisive or forward-thinking comments from the Fed. We still don't think that's coming in until 2023, given where we are. But look, I like Jackson Hole as much as anybody. I'm a skier, I'm a nature enthusiast, but the thing that is concerning me a little is a lot of the pressure that we're putting on, every word that we hear out of the Federal Reserve and the expectations around this conference. So, what I would ask is, Ken, what do you think, given all the craziness that we've seen with the 10-year and the movements in interest rates, what would you do positioning into Jackson Hole?
So I think XLB, that's a material ETF. It buys companies that actually make things. Can you imagine that? Companies that make things. In that portfolio, you find things like DuPont, Dow Chemical, and they're going to have a lot of pricing leverage, especially with the infrastructure being passed, inflation on its way. Look, this is an inflation baseball game, so to speak. we're probably on the second or third inning of this, so still a lot of runway here left. So we kind of like picking up some materials here. I think a lot of viewers are probably underinvested in that area. Yet I think that's going to be the better hedge, again, compared to gold or silver or other commodities. I think material stocks will probably be the best kind of inflation hedge.
Yeah, what about corporate America here in terms of stock buybacks? How are they allocating capital? I know, Ken, you've been looking at buybacks.
Yeah, look, we talked a lot about the Fed, we talked about fiscal. On the other side of it, the trailing 12 months for buybacks is almost $1 trillion. I mean, this last reporting period, Google said year to date up to about $24 billion in buybacks, on its way to about $50 billion in buybacks, and still authorized to buy more. Microsoft, I think, 14 or 16 billion year-to-date buybacks, and you wonder why we don't get much of a correction. You know, it's when the stock goes down, there's companies, but $1 trillion a trailing 12, and I think it means a lot here because remember, there's a lot of doomsayers. Sell may go away. Dan Niles saying 20% sell-offs in the summer, and yet if you follow the footprints of money, the cash flow, look at these charts and volume. Money's still flowing in the stock. So sometimes you can't be so anticipate all these different things down the road. Right in front of you, you have this kind of train that keeps going. Low volatility like 2017, with the biggest drawdown this year, it's 4.5%. It doesn't get better than that. So sometimes don't outthink it.
Yeah, great point. Ken, it's good to see you this morning. Thanks so much.
Great, thank you.